So, good morning, everyone. We have a bit of a group today. Today's topic is a topic I haven't done for a while. Actually, I haven't done it in quite a while. Co-ops, condos, and co-ownerships. And this is a very niche market. Uh, Not condos, but co-ops and co-ownerships. Has anyone ever dealt with them? I know there's a few of you that have dealt with them. So you can unmute yourself to talk, or you can text. You can send us a message through the chat feature at the top right where it says more. I know there's quite a few people that have dealt with them because we talk for once in a while, and they're kind of peculiar. What makes them peculiar? Why would your client want to see one? Oh, everyone's shy today. You can raise your hand and say hi, hello. How does that, no?
There you go.
That was me raising my hand.
You have a chat window open too.
Yeah, it's open. Auto life leases, also life leases, yes. Ranji, that's also something else that I'm not going to talk about today. That's a whole different animal, life lease. And life leases are problematic. You see those more with old age homes, life leases. But there's a life lease that's through the land registry office that ends when you pass away. And there's also these life leases that are usually from nonprofits that allow you to sell them. I'm not going to talk about life leases today. I will talk about co-ops and co-ownerships. So has no one in the room dealt with co-ops or co-ownerships? No? Okay, so I'll just say what I have to say, and then if you have questions, you can interrupt me. Okay, so before I start, my name is John Poletes. I'm a real estate lawyer. I think I know most people here. Is anyone ever hearing me for the first time? So why does anyone ever want to buy a co-op or a co-ownership? Why would they want to buy it? Does anyone know the history of co-op and co-ownership? So you have a duty to explain to your clients that this is an option. And generally speaking, people want to buy them because they consider them a good value. Has no one ever sold one?
No,
See if
I
can.
always think the condominium is the better option.
Okay, so why do you say it's a better option? That means you know something about co-ops and co-ownerships, right?
Yes, I believe co-op is like a condominium is a kind of ownership, and the condominium is like the building itself is for the buyer, and the common elements is common with everyone.
Well, thank you very much, Suri. That's a good idea. That's a good answer.
Can I say something? Good morning.
Yeah, please go ahead. Yeah.
Good morning, everyone.
Good morning.
I was been trying to I look at it after looking at pros and cons. I thought maybe it's not a very good idea because there is several things in it. The down payment is higher when you want to buy, because your purchase has to go via the board of, like, that building board has to give consent when you want to buy co-op. And in general, at the end, the price appreciation at the end is less than comparative building, which are not co-op.
Did everyone hear Paula? So Paula made two good points. You need consent from the board of directors. Sometimes they want an interview to interview the buyer. And in addition to that, she says the values don't go up too much. Is that possible? Does everyone agree? All right, so we'll continue. So thank you for sharing that, Paula. Did I cut out?
No, I'm here. I just had phone call. Thank you. I have phone call. I just disconnected.
Okay, that's all right. Okay, so basically, knowing about co-ops and co-ownership is about giving your clients the choice. You want to be informed about what's available in the market, and you also have a professional duty to explain to them that it is an option. So in summary, people buy co-ops because they're considered a good value and they're less money than a comparable condo. So if I visit a co-op, how am I going to tell it's a co-op or a condo if I just go to visit someone? So imagine if I go to visit my uncle who lives in a co-op. I have an uncle who bought a co-op. He lives in it. How do I know it's a co-op just from visiting it? Is there any way to tell? Maybe it says in the building elevator who owns the building, right? Is it possible? So it's very hard to tell unless you do a title search on if it's a co-op or a condo. So for all intents and purposes, they look identical. Everyone has a unit and everyone has a duty to pay their share, their pro rata share. And co-ops are generally less money than a comparable condominium, but they're not for everyone. And Paula made a good point. You need a bigger down payment. Is that right? Do you know why you need a bigger down payment? Who decides you need a bigger down payment?
I think the board decides that. If I'm not wrong.
Well, the board decides. They're going to ask financial questions of the buyer to determine their financial stability. Sometimes they just want to know who they are because they might not like them. They're not allowed to be prejudiced under the Charter of Rights, but they're going to ask a lot of questions. But basically you need a bigger down payment. Cosro said bank. Cosro is right. Cosro means the lender. So what does the lender want a bigger down payment for a co-op? So first of all, I don't know any banks that lend on co-ops. Why is that? Usually banks do not like to lend for co-ops. Does anyone know? Yeah, it's a small market and it's more complex. It's much more complex. Banks want to grab as much of the market share as they can, and this is a very small market for them to play with. So generally speaking, so as far as lawyers are concerned, I do co-ops and co-ownerships because I'm approved by one of the biggest lenders to do them. Buying a co-op and a co-ownership is a slightly different process than buying a condo. Buying a condo is almost identical to buying a freehold for lawyer's work. But for co-ops, it's a little different. So ask yourself, why is it different and why do they exist? Why do co-ops and co-ownerships exist when we have condos available to exist? Is it a choice? If I was a builder, should I be building co-ops and co-ownerships or should I be building condos now? Are there any builders who are building co-ops and co-ownerships? So basically, the reason co-ops and co-ownerships exist is we didn't always have a Condo Act. We never had a law that allowed you to define space that was above grade. We never had that. So you could never own your unit of space in the sky, your pie in the sky in the past. So what they did is they would take a building, a multi-unit building, and they would divide it up into units, and they would give everyone a share of the whole building, whoever bought into the building. So that's the idea behind co-ops. So basically, let's talk about condos for a second, then I'm going to show you the difference between co-ops and condos, okay? So condos, your ownership rights are defined by the Declaration and the Condo Act. In a condo, the Condo Act is legislation that's really a type of consumer protection. This Condo Act defines everyone's rights, the condo corporation's rights as well. So they have the right to place a lien on a unit that's in advance even of a mortgage. Okay, the only thing that goes in front of a condo corporation lien is property tax. The Condo Act also comes up with certain rules that say you can ask for a reserve fund They must have a reserve fund study. You can ask for a status certificate, and what the status certificate has to contain. It says that in the Condo Act. It even gives a form of what the status certificate should look like. Okay. When you're selling a new condo, the Condo Act also has mandatory disclosure documents that are reinforced by Terion warranty. So basically, when you buy a condo, you get a land titles registered ownership of your dwelling that's accompanied by a proportionate share of the common element ownership. So that's how all condos are. So you own 100% of your dwelling, but ask yourself, what is the dwelling? So what's the dwelling? How do they define the dwelling? So the dwelling is defined by an engineering document, which is in the declaration and a standard unit bylaw. So your dwelling that you own that's defined is really the top of the drywall and the top of the floor and the bottom of the ceiling. So everything that's in this capsule is what you own. You own it 100%. So if there's a default, so there's an ownership for your dwelling, but if there's a default on the mortgage, what can the bank do? Does the bank have to notify the condo corporation they're going to seize your property and exercise security? They don't have to. They only have to inform you. They can exercise security through power of sale. It's the exact same process. It's either power of sale or foreclosure. It's the exact same process as a freehold. So the Condo Act has created registrations that are almost identical to freehold in land titles. Okay, so that's why banks like to loan on condos and not on co-ops, because co-op ownership is a little different. Co-op, by its very definition, is co-ownership rights. Co-ownership rights based on the declaration and the Cooperative Corporations Act. So the Cooperative Corporations Act, although it's revised in 1990, there's been previous legislations that were very similar to corporate law that allowed people to own a unit in a building, but they didn't own it directly. So what did you own? What do you own? Imagine if you bought part of General Motors. Do you get to go and drive any General Motors car that you want? If you own one share of General Motors, how much is a share of General Motors? Does anyone know? I don't know. I just made up. It's a share. So what you own in a co-op is a share of a building. So the share of the building does not give you the right to occupy a unit, but what it does give you is it gives you the right to own part of the unit. So what makes co-ops unique is that there's also an occupancy agreement that accompanies the shareholders agreement that you get with your unit. So basically, what we should know about co-ops is that the ownership structure is different. You're owning shares and you're not owning real estate. You don't directly own real estate, but because you own shares, you also have an occupancy agreement that allows you to occupy a portion of the real estate. So has anyone ever owned a co-op here? Probably no one. So this is a room with people who don't have co-op experience. So the whole idea behind what I'm telling you is that we're not in the Condo Act. We're in a different legislation, and this different legislation, this co-op legislation, does not have the protections of the Condo Act. So there's no mandatory reserve fund. Does anyone know what a reserve fund is? For sure you do. Anyone? I need to hear some voices.
Yes, reserve of fund is the money that's reserved for all the people, like from the maintenance. And if there is something sudden happen, they will use with the decision of the management.
Thank you for being so brave, Suri.
Yeah.
So did everyone hear Suri? So Suri says a reserve fund is for unexpected expenses, right? Unexpected expenses of capital nature. So capital nature expenses are not reserve fund, are reserve fund. Operating expenses like heat and hydro and property tax are not reserve fund. Those are just budget expenses. So how many of you in the room live in a condo? Can anyone say they live in a condo here? 1, 2, 3? No one lives in condos? So basically, if you live in a freehold house, do you have a reserve fund?
Maybe in our bank account.
Yes, but
No one has a reserve fund other than
If-
they may have a line of credit on the house. And if you need to do a roof and the roof is 20,000, what if you don't have the money in the bank to pay for the new roof? Who pays for it?
Bad luck.
Line of credit.
You have to go borrow the money. You have to go borrow the money, or you have to find the money somehow to pay for the roof. Or you're going to have the raindrops coming. You're going to be singing raindrops keep falling on my head. So basically, there's no mandatory reserve fund for co-ops. And the reason I'm telling you this is that's just what the law says. It doesn't stop them from adopting a reserve fund policy, but they have to trust each other because there's no mandatory reserve fund requirement. Many co-ops do not have a balance on hand. So when they need to do a roof or repair a parking garage, what do? They send a notice to all the shareholders to chip in. They say this is an assessment. And in condo speak, we call that a special assessment. Another thing that co-ops don't have is they don't have a status certificate requirement. What's a status certificate? Who requires a status certificate? So a lender requires it when they lend money. A buyer likes to look at the status certificate before they firm up their deal. So they usually have a condition on status. So the law does not require them to produce a status certificate. Yet the last 10 years, all the co-ops I've reviewed, they've all provided us a form of status certificate. So although it's not on the status certificate form that's in the Condo Act, they do give us what I call an estoppel certificate. So what does it include? It includes the condo declaration, the co-op declaration, the bylaws, the rules and regulations, the audited financials, the budgets, and the budget, and so on. And based on these documents, I would review it. I would review these documents, but I would need a condition in the offer to make it work, right? So basically, a co-op is a little different than a condo, but it's very similar to a condo. So a lot of these documents that are mandatory in condos are basically created voluntarily by a lot of co-ops. So as far as I'm concerned nowadays, the biggest difference between co-ops and condos is the age and also the financing. So Eric has a lot of comments here. Eric, yeah, so Eric is talking about reserve fund. You can all read that, okay? So co-ops do not have a mandatory reserve fund study or status certificate. What about the maintenance fees? Quite often the maintenance fees of co-ops are higher, or they appear high. Why is that? A lot of them don't have separate billing, and all of them include property tax in the maintenance fees. So there's no separate property tax bill. So you may have a shock and you see the maintenance fees are $1,000 or more, but it most often includes property tax, heat, water, and in many times it also includes electricity. So is that a good thing? It is a good thing if everyone uses the same amount of utilities, but if you have someone who's using a lot of utilities, that may be a negative, okay? We just go to the next slide. So basically, I consider co-ops are similar to owning a share in an apartment building. So imagine 20 people bought a 20-unit apartment building, and they said, we're going to own a share each, and we're all going to occupy a unit. Which unit would you want to take? Everyone wants to take the biggest unit on top, on the highest floor. Is that true? So what makes it different than owning a share in an apartment building? So that what makes this unique is you may have an occupancy agreement that may be a side agreement or an occupancy agreement that's attached to your shares. There's no land titles registration for the co-op. So there's no land titles, there's no land registry ownership. You just get a share certificate. Does that matter to you if you're a buyer? Is there any doubt that you own it? There should be no doubt at all. So you get a share certificate, but the reality is the banks don't like them. It's a very small market, and there's a lot less mortgage, there's a lot less financing available. So there's no mortgage financing. What there is you can pledge your shares as security. And in order to pledge any property in Ontario, the lender has to register a PPSA on the borrower. And usually this is accompanied by a promissory note or a general security agreement. So this is very similar to the way people purchase and sell businesses and chattels in corporate law. So I'm going to ask you a question now. Should this cost more than buying real estate? And Khosrow is asking about land transfer tax. We will answer that in a couple of slides. Don't worry, Khosrow, we're going to talk about it. So Khosrow, automatically his brain started thinking, how can I save money? And what about land transfer tax? If I'm only buying shares and I'm not buying real estate, what about land transfer tax? I can tell you at one time people were not paying land transfer tax for co-ops, and the Land Transfer Tax Act became amended, and it says if you're buying shares that are substantially related only to real estate ownership, then there is land transfer tax. So I will tell you, if you incorporate a company and you sell the shares to someone else, and all the company owns is real estate, they will have to pay land transfer tax when they buy the shares. So that's part of the law. It's part of the law in Ontario. So, so land transfer tax does apply. But as far as anyone else is concerned, it's a little more complicated a transaction because we don't have Condo Act protection, we don't have Condo Act disclosure documents, and we don't have registration of a mortgage. We have a PPSA registration and pledging of shares. Okay. So let's look at our third slide. So co-ownerships. How is a co-ownership different than a co-op? So this is where things become a little muddy. A co-ownership gives you a percentage ownership of the building. So there's actually a registration combined with a right to occupy a specific unit. So you're allowed, so this is not registered under the Condo Act ownership, but you're a co-owner just the same as if you bought a house with a friend or with your spouse, and you're co-owners. There's also agreements that your ownership agreement also gives you certain rights to occupy a unit. This system allows mortgages to be registered on title, but it's such a small market, there's no banks that will loan on co-ownerships either. And it's very similar to the management of a co-op. Again, you don't have any Condo Act protections. There's no status certificate, there's no mandatory reserve fund. And again, you own a share in an apartment building, but compared to a co-op, on a co-ownership, you are a registered owner on title with a right to occupy a dwelling. So basically,
John.
when someone made up co-ownerships, they were kind of evolving it to condo, but there was no Condo Act.
John, if it's buying a share, if you buy just half amount of the share that is allow you to occupy half a unit, is it possible?
I don't think the condo corporation, the co-op corporation will allow someone to buy half a unit unless they're partners, spouses or partners, and they're designed to be owner occupied. So if you're in one of these buildings, I doubt you'll ever see a tenant or very few tenants. Okay.
Okay. So you have to buy enough share to occupy.
Well, the shares will be attached to a dwelling, right? So what you're saying is, can I have a roommate? Is that what you're saying?
No, not really. So because it's buying shares.
Yeah,
so
you're not buying shares in the stock market where you can buy one share, right? You're buying shares that are equal to the ownership
Of one unit.
that allows you to occupy one unit, a specific
unit.
unit.
Okay.
So it's not fractional. It's not a fraction that you can divide up. It's a
Okay, I got
fraction that so the only time I've seen co-ownerships done in modern times is people are doing them now with cottages, and they divide up weeks, and they'll say, I want 2 weeks in the spring, or 2 weeks in the summer, or a week in the spring and a week in the summer. Does that make sense? And those are called fractional ownerships, but really they're just a different spin on co-ownership. Has anyone ever heard of those? They're not marketed too much. Sometimes you see them on MLS. You know, you'll see a Muskoka cottage or someplace up north, and the price is ridiculously low because it's only for a week or for 2 weeks. Okay. So basically what I'm telling you is co-ownerships and co-ops, you're owning a fraction of the building, in one case through registration on title, and in the other case through owning shares. Okay. And it's combined with the right to occupy. These are systems that pre-existed the Condominium Act. So the Condominium Act has been around for a long time. It's been probably around for about 40 years now. So let's talk about the negatives. Co-op and co-ownership cons. What are the negatives? So I've given you a lot of information about co-ops and co-ownerships. What are the main negative things about them? So if I'm a lender, how do I foreclose on a co-ownership or a co-op? It's much more difficult. Is it true? It's more complicated. Another negative is that if I'm an owner of a co-ownership or co-op, I will have shared liabilities. So if my next door neighbor is not paying their property tax and utilities, who has to pay their property tax? Can we let it go into default? We can never let it go into default. So after I've told you that, how many lenders do you think want to lend on these? There's a lot less lenders. Most of the lenders that I know of are credit unions. There's also VTB and private lenders, but this is very rare. And when the credit unions do lend on co-ops and co-ownerships, it's not at the same rate as first mortgages. So what's the first mortgage rate today? No one knows. No one knows that today, right? What is it, 1.7?
It's 99
1.7,
cents.
1.8.
No,
1.7,
99 cents. 99 cents.
Yeah, that means money is free. So for
Yeah.
co-ops and co-ownership, it's a lot more expensive. Higher interest rates, and you need a higher down payment. Why do you need a higher down payment? Because the lender says this is higher risk for me, so I want you to put a lower loan to value ratio. So typically you need at least 30% down to buy one of these. This will eliminate a lot of the buyers that you have already. So if your buyer is a first-time buyer with 10% down, are they going to buy a co-op? There's absolutely no way they can buy a co-op with 10% down unless they get a VTB. VTB, vendor take back mortgage. So remember that one of the main negatives is the financing. This is the biggest negative. Shared liabilities is a negative. No Condo Act protection. They may not have a maintenance, they may not have a reserve fund, and they may not provide an estoppel or status certificate, okay? So now I'm going to give you a few more negatives. Many buildings that you're buying into nowadays, they have an existing blanket mortgage. What does that mean? Who knows what a blanket mortgage is? Is that nice and warm? So a lot of these buildings, they may have a mortgage that was created when the building was newly built, or more likely nowadays, because a lot of these buildings are 40 and 50 and 60 years old, quite often, instead of doing a special assessment to repair or replace sections of the building, they may assume a mortgage and everyone just pays their share of the mortgage and their maintenance fees. So what does that mean to you if you're buying into one of these buildings, if they have a blanket mortgage? It
So
means
you're obligated to get whatever rate they say.
you have to
pay
pay. You have
whatever
to pay.
rate.
It's already set You're assuming it. They have to approve you. But what that also means is that your own mortgage to buy the unit goes into second position. How many mortgages want to be in second position? Usually second place mortgages, second place lenders, they charge a higher rate. They consider it higher risk. So remember, another drawback to these buildings is they're also a lot older. Paula said this right from the beginning. She got right to the money. She says less chance of a capital gain due to age and the ownership structure. And I keep saying this, since there's no reserve fund, there's a higher possibility of special assessments. And someone said this, I think it was Judy. She said that you need approval by the board of directors. So why would a board of directors reject you? They can reject you for a lot of reasons, and they don't have to tell you. One of the reasons they could reject you is because they don't like your financial position. Maybe they feel you have a high loan to value ratio. They may think that you're not a good fit in the building because they might think that you're going to be an investor and not an owner occupier. Okay. These buildings are mostly owner occupied. You need approval of the board of directors. And let's look at our third slide of negatives. The third slide is they're difficult to sell and difficult to buy. There's no CMHC, the banks don't loan, and it's only trust companies or credit unions. I'm on the list of some credit unions to do co-op mortgages and co-op purchases, and I can tell you they cost a lot more than doing a regular purchase and sale. So a regular purchase and sale, my base legal fee is around $850 on a purchase of a condo. Why is it $2,000 for a co-op? Because it can be a lot more complicated. It's not always 2,000. It could be 1,600. It could be 1,800, but it's a lot more complicated for a co-op purchase and sale. It's similar to buying a business. That's the fee structure, and that's the type of work that's involved. Okay, so remember, joint ownership gives you possibility of joint debts, and the board of directors do interview people. And this is a restriction in the article of incorporation. They do not need to give you reasons for not approving you. I have had a client rejected by a corporation because they felt that he didn't have enough income and enough money. So he got out of the deal. I've looked on web forms, and web forms does have a form. It does have a form for co-op and co-ownership. I'm going to show you, I'm going to give you the form number in a second. Let's give you some positives. So the positives of co-op and co-ownership is they're much bigger units than condos. It's a lot less money. The maintenance fees are less. There's less turnover. They're mostly owner occupied. There's very few tenants. Mostly it's owner occupied. So you have a lot more pride of ownership. Quite often they're in good locations in the city that you can't find condos in. I've done closings on co-ops that are over $2 million. Can you believe that? So a lot of people consider them a cheap option. They're also a luxury option in many cases. So I've done closings in the Rosedale area, over $2 million for one unit. And people are lined up to buy them. It's a very small market of people who already live in the area. They want to retire in the area. The one that I did about 3 or 4 years ago that was over 2 million, it had 60 foot of balcony terrace balcony, 60 feet, looking into the ravine. It was a penthouse unit. So those are the pros. It was fully renovated. The place had pools and tennis and terraces. It was fully renovated, and the person who bought it because it had a brand new laundry room built into the unit. Unfortunately, after they moved in, guess what they found out? They received a notice from the condo corporation that they weren't allowed to hook up their washer and dryer because the drains from the laundry could not accommodate, the building drains could not accommodate washing machines discharging. These rules also exist in some older condo buildings that don't have ensuite laundry rooms. So now a person who spent over 2 million for his apartment would have to go to a laundry room to do their laundry. And they weren't too happy about that they had to go to a laundry room, right? And at the end of the day, they ended up suing the co-op corporation for not disclosing that in the status certificate, because in that case, we did have a status certificate or estoppel certificate. So if you look in web forms, there's two forms that you can use for condo and co-op. Form 102 for co-op or 115 for co-ownership. And each of these forms define what shares you're buying and the right to occupy a particular dwelling. As far as a lawyer is concerned, I treat them both as share sales, even though I am registering a co-ownership. I'm registering a fractional ownership. Basically, less lawyers can take these files for purchase because you have to be on the lender's list. I'm on the Duca list. There's a lot of lenders, small lenders that are in this niche market. They're not too competitive, but Duca is getting the bulk of all of these mortgages. This is what I've learned. So even though there's no real estate conveyance, the ownership of the property remains with the corporation. Land transfer tax is still payable. So whoever thought they were getting a deal on land transfer tax, I'm very sorry. There's no land transfer tax deal for anything that involves real estate, even though it's a share purchase. So I took a look at the AREA form 102 and 115 that's in web forms, and I couldn't find any clauses in the new web forms. In the old web forms, I have looked at it. There was a clause for a disclosure certificate or estoppel certificate. The new document does not have a clause, but I can tell you just use the status certificate condition. And instead of condo status certificate, change the word to co-op or co-ownership status certificate. I would tell you, you must have a status certificate condition. Otherwise, your clients will blame you for not protecting their interest. So although there's no statutory requirement of a status certificate that they should give, every single co-op that I see nowadays does give a similar document. So they're all voluntarily compliant. The document should include declaration, bylaws, rules and regulations, financial statements, budget, and reserve fund study if they have it. Okay? But these are things that people have to be aware of. So who is more likely to buy a co-op nowadays? Usually it's someone who's not going to have a lot of financing. Maybe they'll have 30 to 50% financing at most, right? Additionally, I would like to see a condition in the offer for approval by the board of directors. If you look at the form 115 and 112 and 102, there is something that says subject to approval of the board of directors, but it's not clear how long you have and what happens. I would like a well-defined condition. So I would tell you word your own condition, that you have a board of directors review condition that gives us a clear date when our client will be reviewed. Otherwise, we don't want to go into a holding pattern until closing to get the board of directors review. I'd want it similar to the financing condition. Because if we're not approved for financing and we're not approved by the board of directors, we want to move on right away. I don't want to have to wait until the closing day for them to approve us. Let's talk about a condition on inspection. So normally you put a condition on inspection for a lot of things. Why would you put it on a co-op? Who owns the interior of the co-op?
Just hang on just for a second, guys.
Did we lose any? Is everyone still there?
Yeah, I think your connection is not working right, John.
Oh, I can hear
Yes.
you. I can hear you pretty good.
I can hear both of you.
Yeah, okay, you're good. Continue
Okay.
on.
All right, so basically, the reason I want you to have a condition on inspection is most of these units are older and almost all of them are very renovated. I don't want your client to have an experience like that person who bought the unit in Rosedale and they found out they couldn't use their washing machine in the unit. I would not only have a professional inspector, I would also ask the building management and the board of directors to inspect it. I would have a condition that they're going to inspect it and give us a report that everything complies with the rules and regulations of the building. Because you don't want to have a repeat of the laundry room story or a complaint that the past owner of the unit, occupant of the unit, did something that was illegal that has to be returned to its original state. So I would like to have an inspection in almost every case, okay? So yes, there is title insurance for co-ops and co-ownerships. Do you need it? I would say I would take it anyway because it costs less usually for me to close with title insurance than to close without title insurance. These are my coordinates. So why do you want to talk about co-ops and co-ownerships to your clients? Because it's a niche market. It's something that you can market yourself as someone who also does this part of the business. A lot of people don't do this area of business. It makes you more of a specialist.